Okay, welcome to the Swing Trading with Cycles channel. We're going to do an update on Dixie today, and we'll also talk about bonds since they are so interconnected. And just a reminder, right, like let's look at this monthly chart as I've been posting on Twitter. It's December 21st, by the way. If you're not following on Twitter, definitely take a look at the link in the description. But as I've been posting on Twitter, it appears we have made a 3-year cycle high for the dollar. If you're not familiar with cycles, especially price action based cycles, definitely take a look at the link in the description. Got some written content, a couple of videos, a ton of content out there to help you kind of think through it. But I've been posting on Twitter, like for instance, just this was a cycle high, that was a cycle high, right? That was a cycle high. That's what these things tend to look like, right? Huge swing highs that lead to big downside, right? Like look at this. I mean, look at this textbook downtrend, right? Like this is a monthly chart. We go down, we bounce for a couple months, and then we finish it. Look at that. Like we go down, we bounce, and then we finish it, right? Like so it's not like it's a story as old as time, right? So the idea is we go down, we'll bounce, and then we'll kind of finish it. We would expect the cycle low to come somewhere around early January 2024. If this is going to be a 3-year cycle ballpark, it's never going to be exact. Last 3-year cycle was about 35 months, so pretty close actually. So we were here on month 23. So this 3-year cycle top is potentially September, which is month 20. How do I know that? Well, first off, to have a major cycle top, you need a swing high. What is a swing high? Take a look at the video, link in the description, how to spot a market top. But it's when a candle makes a higher high and then a subsequent candle makes a lower low below that candle, right? So this is the candle that made the higher high on the monthly chart. It went up to 114.778. We consolidated the next month, so we didn't make that lower low the next month, but then we finished the job in November. We made that lower low in November, below the low of this candle. So this candle's high was 114.778, but the low was 107.68. And so by going below 107.68, we created a monthly swing high, meaning the month of September is now a swing high. So we started it. Another way of saying that is we started a downtrend on the monthly chart. That's bad news, right? If you're in a downtrend on the monthly chart, that's bad for weekly trades. It's bad. Well, that's generally going to be bad for weekly trades. Maybe you could find the 2 or 3 day period where we're going up so you can kind of scalp. But a monthly downtrend is not good. And to be clear, the expectation is that we would fall for the rest of 2023, right? Making lower highs along the way, so there'll be bounces, but that we are eventually heading lower, right, to make that cycle low. And so the next piece of evidence we would need to have to tell us that cycle low is in is a quarterly swing high, because that's how it works, right? And just to be clear, this monthly swing high, let's just like rewind for a second. Let's just make sure everything is crystal clear. This monthly swing high that happened in September is the result of a daily swing high. This one right here, we know exactly when it happened, right? It was day 11 of its respective daily cycle. It was September 27th. What happened that day? Well, that day we went up and made a higher high relative to the previous candle, and then we made a lower low. That is a outside candle. In this case, it was bearish because it's red going lower. This is what started it all, right? Then you had like 4 days of follow through. You had this feeble bounce, which was a lower high, and then the downtrend really started in earnest, right? And then we started bouncing lower, lower, lower. So because we kept making lower lows, that daily swing high turned into a weekly swing high on week 17 of the weekly cycle. And because we continued to make lower lows, it turned into the swing high that we were just looking at on the monthly chart. And so the idea here is that this monthly swing high is going to turn into a quarterly swing high. In fact, the number that we need to get below is 104.636. And notice we're actually below that right now. So it's always important to wait for a candle to close to kind of confirm the move. And so this candle closes at the end of at the end of December. And as I said, it's December 21st, so we're relatively early in the month, we're relatively late in the month. Not that many trading days left. And so it's going to be interesting to see. Now, what I'll say is we could easily close slightly below it or slightly above it, and that doesn't really give you a huge signal. What you'd really be looking for is a more decisive close below it. And obviously, you'll look to see follow through the next, like in Q1, right? It's like what we would look to see is something like that, right? As our Q1 candle. And maybe we even get a little bit of a bounce after that. Like you could see a world where our Q2 candle looks like that, but then we do something like that, and then that, and then that, right? It's the lower highs we talked about, right? And it wouldn't be for that many quarters if the decline is really only going to last a year. But like you get the picture, something like that, right? And so the way, like, so this is the big picture. This is the big pattern quarterly. So again, 104.636 if we close the month. That tells us that this is a quarterly swing high, the same way this was a quarterly swing high, which was confirmed the next quarter. This was a quarterly swing high, right? This is a quarterly swing high that wasn't marked. I mean, that was a big one, led to a huge decline, right? And notice, this isn't unique. That's how price action, I mean, this is back, what is this? This is back in 1985. It's not like the way price moves changes. Look what happened. It moved down, and what is this? That's right, it's a higher low, and then we finished the job. It's the same thing on all, like, regardless of what the time frame is and regardless of what the time period is. So if we zoom down to the weekly chart, the weekly cycle is still continuing, right? And it's, that said, we've had weekly cycles that were 30 weeks long. Let's zoom into that. So, and this was a really, really shallow weekly cycle decline here, right? So this is a little 20-week cycle. We got a 17-week top, like top on week 17, and then like just nice little shallow decline into week 20, and then look at the rocket ship out of that. So now this was a 17-week rally coming up to here. We talked about this being our swing low, right? Just for reference, pretty big rally, 13%, right? And so your expectation was that at some point we would put in a weekly cycle low and then we would bounce and then continue to move down. But we haven't even been strong enough to be able to put in a weekly cycle low. So again, what I mean by that is at some point you're expecting some kind of bounce, right? And again, a lower high. So I was expecting something like this, and then maybe this, and then that, right? Just to be clear, you see that? Like I was expecting, okay, we'll get some kind of weekly cycle low, maybe week 20, 21, 22. Instead, we just went straight down. All that to say, though, we're still going to get this lower high here. There's going to be a point where we're going to have like a rally for a few weeks. Like that's got to happen. It's just how price works, right? And so at some point that will happen, and it will be, once we see this rolling over, we see the swing high, it'll be a massive short opportunity for here to get short for those lower lows. And then, of course, it'll happen again, right? We'll like rebound and then we'll go again. But all that to say, the dollar is even weaker than it seemed, right? So it was trying to make a swing low here on week 28. We're now here on week 29. Unclear if that's going to hold. So maybe this does end up being the swing low or the weekly swing, the weekly cycle low. We need to trade above 105.249, which sounds like a tall order right now, just as heavy as this thing has been trading. So we're going to have to watch and see that. And on the daily cycle level, you'll see this thing hasn't been able to rally more than 3 days without getting snuffed out. Like you see, this little rally got snuffed out. This little rally got snuffed out. This little rally snuffed out. This little rally looked like it was going to get snuffed out. Look at these two red candles. But now we're kind of fighting back. We're going to try to make a cycle high above here. And this would become your daily cycle low on day 34. But I mean, look at this downtrend, man. You look in the textbook, and like lower high, lower high, lower high. I mean, it's a perfect downtrend. Now, if we do this, it's like, okay, now we started a little uptrend on the daily chart, and that's what we would need to put in a couple of weeks of a rally, right? That weekly cycle rally we're talking about that we're going to get at some point. So we are going to be watching for that. So I mentioned I'll talk about bonds. So let me switch gears there. And so I'll look at the BND, ticker BND. It's the total bond index for that Vanguard. It's a Vanguard product that tries to capture the total U.S. bond market. And you can see, and we'll zoom into TLT after this, but we're at risk of making a swing high if we trade below, if we close below $73.05, right? And we're already below that now. We're below $73. And so we're going to have to see where we close the week. And the danger here, I mean, you can see this massive downtrend, lower high, finish the job, lower high that teased us, this. So the risk is that this is just a lower high that leads to another lower low, and we continue like the downtrend, which is a great trading opportunity, to be clear. And just macro-wise, there was this big announcement by the Bank of Japan, the Central Bank of Japan, that they're not gonna, like, they're basically allowing their interest rates to rise, which should put upward pressure on all interest rates, because what it's essentially doing is saying to Japanese citizens, instead of putting your capital in foreign investments, you now have a local option, like you can get a return. And so you have to imagine that's going to impact treasury buyers. And so speaking of treasuries, let's look at the 30-year treasury. I've been posting this. This is the thing that's most closely correlated with TLT, which is the trading vehicle that I like to use. And so it appears this thing may have made a weekly cycle low here on week 18. This was a really long cycle on week 35. Although, to be clear, you can argue, right, like you're really seeing a smaller cycle within this, right? Like maybe, yeah, it's hard. You could say like this is a small cycle, right, of 13 weeks. And then we start another new cycle that's 22 weeks. Like you could say that this is, you could argue this is going to just be the half of one larger cycle. We'll see. The point is we have a big old swing low right here, right? So we had this furious rally for 12 weeks, which corresponds with that massive decline in the, just bonds in general that we just looked at. So this is your massive rally. We topped out on week 12, and then we just started to decline pretty, like this is a pretty like steep decline, but now we've bounced. Week 18, we had a little doji candle. We consolidated last week. So this would be, just to be clear, this would be week 2 of a new weekly cycle. And it'll just, now it's a question of how many weeks will this weekly cycle rally, just like we talked about for the dollar, for instance. And if we think about the daily, this is day 8 of a new daily cycle. So that's important to kind of to understand. A weekly cycle, any weekly cycle low is also a daily cycle low. So it's helpful to kind of zoom in and understand what is the daily cycle progressing like that is creating this new weekly cycle. And so far, it looks pretty robust, right? We had 3 big trend days, and we actually started today pretty red. And it was like, uh-oh, wait a second, are we going to make a lower low? And I posted this on Twitter. It's always important to know your levels. Understand the price action, because it's not, when people say foolish things like you can see whatever you want to see in a chart, it tells you they have no idea what they're talking about. It's math, friends. We're either making higher highs and higher lows, or we're making lower lows and lower highs, or we're doing something in between, so we're in the range. So in this case, we needed to stay above the low from yesterday, right? The low was 3.636. We kind of came like halfway into the range, and now we rebounded. So again, I said we started the day red, right? What are we now? We're green. What does this mean? This yield rising means less people buying U.S. treasuries. And again, as I talked about the macro, like there are reasons why, and bonds around the world are going up. We know the ECB is hawkish, even more hawkish than the Fed. So their rates are going to start going up as well. So you have foreign investors not as incentivized to buy U.S. treasuries and other U.S. assets, which will also put downward pressure on the dollar, right? If you want to buy U.S. bonds, you have to use dollars for that, right? That helps to keep dollar prices higher as well. So it's all really connected. And so we're going to want to see the character of this daily cycle to give us a sense of the weekly cycle. But look at this big run up. Remember, we just looked at that run up on the weekly cycle. That was all basically one daily cycle. Like, look, it barely ever really pulled back, right? It just kept running. Like the same way, like this is the definition of a really, this is a really strong trend. I mean, look at that. The lower highs are like so shallow. It's just amazing. It's just like, wow. And of course, that was your warning, right? Once we made this swing high here and then we made this lower high, that was your warning. Okay, now what was a beautiful uptrend is now, an equally beautiful downtrend. I mean, look at that. So now it's a question of, is this ending that downtrend and we're now starting a new weekly cycle? Certainly looks like it. It's really a question now of how long will this weekly cycle rally? And as a clue for that, we're going to want to look at how long this daily cycle is going to rally. I mean, in this case, let's look at how long was it before the first, like this you could say maybe is your first kind of significant swing high. That was day 16, right? You could say, maybe this was the start of a period of weakness. That was day 25. So we can easily rally for a little bit. And the reason why, and look at what that's doing to the monthly chart. My God, look at that thing. Woo! This thing was red. It was looking ugly. It was about to touch the 10-month moving average, and everything has changed. We're now going from red to green. I mean, this is bullish it's quite bullish. And what this is setting up is a bullish outside monthly candle. We don't have enough time left in the month to complete it in January. So it's trying to set this up in December. So it's trying to set this up for January. Like that's what we might see, right? So we get a close here that's something like a little hammer, and then like closes closer to the highs, and the January candle pushes us up, makes a new high, something like that. And so that is not good news for TLT. In TLT, you'll see the chart looks very similar to the BND chart that we just kind of talked about. So we have this like really rough downtrend, and then we have this little low, this little 7-week rally, and then this another big plunge. I mean, look at the magnitude of these plunges. My God, right? Like, I mean, you just plunge, and then you bounce just a little bit, and then you plunge, and now you bounce just a little bit. And so now is this another plunge before a little bounce? That's what it's starting to look like. And again, the stronger the U.S. Treasury is, the yield, the higher the yield goes, the lower this thing goes. So this is not a good setup. Not a good setup. Though is a good setup potentially for TLT puts. And so the top has been on week 6 so far, and this is week 8. So that's not good because it's not super late in the weekly cycle. And so just to be really clear, this suggests that the weekly cycle decline has already started for TLT on week 6. And so it's only week 8. And so that gives us a lot of room to fall. We're still pretty elevated above the 10-week moving average. So we'll see how we react when we get to around those levels. You would expect that maybe that price, pauses a little bit, maybe consolidates just a little bit, even if it is going to go lower. But what was looking like my expectation was that we would get this daily cycle low and then we'd go higher, right? And then we continue higher. Maybe not back to all-time highs by any means, but you get a little bit more bounce to this daily cycle. Now it's looking like this is actually a short opportunity, right? Something like that, right? Like, which you got to be nimble. Like, I'll take it, right? Like low IV puts, that I can work with that, So something like, oh wow, that's ugly, but bear with me here, folks. You can imagine something like that. Yeah, if I do that, right? You get the picture though, right? Like it's going to be a downtrend, and we want to be positioned. I mean, think about this. This tells you that we may be going back to test the 91 area, and we're up here at 103 already. So that's a lot of downside. So we will, and lastly, we'll just look at the monthly chart. Always important to know what the opening price is for the month. In this case, the opening price is $103.15. We have slipped below that. We are now red on the month. My God, look at how bearish this candle is. The same way, like, not to belabor the point, but the same way the 30-year yield is setting up a bullish outside monthly candle, this is just setting up the reverse, a bearish outside monthly candle, right? Like, it made a new high, and now it's potentially going to make a new low. And it's super early. I'm not saying it's definitely going to happen, but this is what the pattern would look like, right? That our January candle would do something like that, right? And then it's really a question of, testing this level here, which is the high that's kind of holding us up, because that is also a swing high, or excuse me, a swing low. That's also a swing low on the monthly chart. And so it's a question of, is that going to get tested? Is that going to give way? And are we going to ultimately test all-time lows in like the $80 range, which it certainly looked like we were as we were dropping here. these bounces are always fairly convincing, and you have to respect them for as long as you have to respect them, right? As long as they're holding levels. We're now not holding levels anymore, so downside is to be expected. So we'll leave it at that. That's our Dixie and rates update. These are big macro trades with a lot of money behind them. So I definitely like to play these, again, either from the long or the short side, depending on what the chart is telling us. And right now for TLT, it's saying short. We'll leave it at that. Thank you for watching.